the opportunities are just never going to stop coming. I know they're more because I track the patent office applications for patents. It's not going linear like this. It's exponentially ramping.
Wow.
The IPO market's been dead, and the private equity market has really sucked the life out of the juice out of the earlier leaders because they remain private much longer. I think AI, okay, I don't think. I listen to other brilliant people, and when the market corroborates their opinion, I go with it. But the CEO of Intuit said, I don't want to get this wrong. A very notable CEO said, AI is as significant as the invention of electricity. And the CEO, one of the CEOs of Google said, he's never seen hasn't seen something this big since the advent of SaaS and cloud. My experts I'm listening to are telling me that the capture of the AI 50% of it will be captured by semiconductors. I also think that this, if implemented and meets its expectations, is going to expand the margins across every public company. Where is the S&P going to be in 5 years if everyone's margins open up by 3 to 30%, 3 to 20%? What would that do to the S&P?
Welcome to the Roe Show podcast. Welcome to the Roe Show. Today, I have the honor of being here with Jim Roppel. He's hedge fund founder, manager, and risk manager, Roppel Capital Management. He has over 35 years of successful trading experience, and he's mentioned in countless books. You can look it up. He's everywhere. He's also the founder of the Roppel Report, where he teaches and he shares all his amazing market views. How you doing over there, Jim?
I am very, you said you're honored. I am just another stock trader, man. I'm honored to be on your show. Thanks for having me. And I am in exceptionally good spirits. Follow through day action. You know, how am I? As long as my family's chill, everything defaults to the market. And when the market acts like this, I'm good.
I love it. You have a great attitude. You're so positive and you're so humble. So excited to have you here today and to learn from you about your trading techniques and strategies. Did you know that when people Google you, that you're known as one of the greatest growth stock investors of all time?
Yeah, that's not true.
But that's what they say about you.
I mean, look, I've had about 8 stocks that I really killed it in. And then I've had long stretches of nothing. I mean, anybody could do as well as I did if you give it 40 years. You know, I mean, that is hyperbole. I mean, I've had some great wins and I've handled a couple of them really well. But interspersed between those, I have struck out repetitively for long stretches. So thank you. That makes me feel great, but I don't believe I deserve that. I think anybody can do it. You know, Bill O'Neill set out the tenets. I mean, it sounds really simple. All you have to do is follow them, which is really, really difficult. But it's all there. Think about the books that have been written. I mean, Livermore's book's been around for what, 80, 90 years? If anybody could just read that and implement, you would do better than me, or at least as good as me. But it's not lack of knowledge or availability of knowledge. It's inability to implement because, emotions, or you're not disciplined. There's 1,000 reasons people don't make it, but
absolutely. Well said. It's about the emotions of being disciplined and executing properly. You can have all the skills, you can know all the stocks to trade, but if you're not executing and keeping those emotions in check when you make those decisions, you won't be as successful. So kudos to you for doing that. So, Jim, I want to start with your background because you've had an amazing career. And I really love your story about trading in your dorm room. Could you tell us about that and your Bill O'Neill experiences and how it shaped your career?
Well, that is 100% true. We would download with a Commodore 64 in the dorm room through Sears or CompuServe at about $5 a minute to download a page of options. And to download one page would take a minute or two. And by the time we got the quotes, they were stale, and we were trading options right before the crash of 87. And that's where I got started. My two really good friends in college, one's father was a stockbroker, the other had inherited a bunch of stock, unfortunately, through a death in the family. And that was it, man. I mean, we just watched CNN Moneyline and watched the market all day. And I was a loser in the market for a very prolonged period of time. And then I was at 7-Eleven and I found the newspaper called Investors Daily at that time. And I was just all in on it. And then I read Bill's book, and then I started to go see Bill all the time. I mean, anywhere he would speak in the country, I was on the jet plane and fly to see him. So I've seen Bill probably an average of 2 or 3 times a year for, up until 5 years ago, I started in 85. So I've seen Bill and then I became an institutional customer of O'Neill and Company. And I would talk to Bill, I had scheduled calls with him, and then he would call me out of the blue just to say, what are you doing? What do you have? What do you think? No, I was really calling him or asking him what he thought.
Wow. Well, he's truly a legend.
He's a legend. He is deserving of that moniker. I someday aspire to be half as good. That would be great for me.
Well, you're truly so humble, and we admire that about you, Jim. Could you tell us something about Bill that maybe people don't know about, something that's beyond the headlines that you know about him?
I think Bill was very cautious until he wasn't. And then I think he became very aggressive. I think he was an expert at understanding when you should probe the market with repetitive 100 lots over and over and just build and back off. But when he got traction, I think he was very quick to get on margin. And I think he was so elite that he could pile on big size and then get out very quickly if it didn't work and eliminate a lot of damage, where I just think his skill and acumen was at a higher level than most others through discipline and dedication to his craft. I think to operate at his level is unique and rare. And if you're going to operate like that, you've got to be all in, totally committed, have your head checked. Your psychology's got to be wound up and lined up properly. You got to be, he was a very prudent risk taker. I mean, he could throw the hammer down like nobody else. So that's my best.
Love that. That's amazing. Being razor sharp and keeping that mental state calm. And it's about market psychology. I always say mindset is everything. It's about 80, maybe 90% of the trade is about keeping your cool, remaining neutral, never too high or too low, and letting those losses roll off your back. Take that stop loss, move forward, and don't take that emotion into the next trade. And yeah, brilliance there. I love it. So let's go and take that, because I know you embody a lot of that. And let's talk about the markets. Here we are right now, first week in November. We've gotten quite a few follow through days on higher volume. Loving this action. Give us your thoughts, Jim.
I think you could make a case to be very long here, very, very long. Wow. But I think you have to measure that with your cushion. The Russell's up 5% in 2-3 days. This is a change of character. It's powerful. Smart players are committing significant capital into this right now. I mean, the institutions are buying, but speculators like me are building, and everything's a risk. This could fail, but if you're a cowboy, you could probably be almost on margin right now. I mean, that's how powerful this is. And the initial follow-through day left me scrambling to find ideas. So my initial grade on that follow-through day was like a C. But the subsequent power in following days has really given me, I think it's up around a B right now, quality of follow-through day, action, percentage gain. this market has 3 steps down in the indexes, which created a lot of double bottoms, and it warms my heart, because one of the killings I made was in a stock called SDLI, which had a 3 stair step down, and I bought over all 3 up, and it went crazy, and then it was taken over by JDS Uniphase. So, and Broadcom was the first stock that I made $1 million in a single trade. Same pattern. So this really, it's kind of like your pet stock. You never forget it. And when I see a repeat pattern like this, it excites me, and I have to remain tempered, because I'm pretty long here, but I have to be careful about my cushion. I'm not up massively significantly enough to get big. So you know what Bill would say is, be patient, don't force it. But this market is dragging me in. I feel I have to get in. I don't ever want to make a trade. I don't want to, but I have to feel forced. I have to sell because I'm hitting my stop losses. I have to get in because it's running properly through pivot points, with many stocks following up. There's ample reason to believe you need to be committing money here. And actually, we're banging up into some MAs, and there's been some significant moves. We really could, another way to grade this is, how do we digest this significant move up off the bottom? Do we go dead tight in the indexes and the leaders sideways and volume evaporates? That's A plus. But if it starts to leak over, not quite so good. And if it starts to come down badly, that is going to go to an F. So we're not anywhere near out of the woods, but I have a lot of positive signals.
Absolutely. Now, a few questions regarding this movement. I know there's a lot of talk of people saying, is it just a short covering from all the extreme bearishness? Is this real buying? Is it setting up to be a great, seasonally, November and December are our strongest months? Is it just that? Is it something bigger for longer term? You think we're going to have a Santa Claus rally that's going to be great this year? We're seeing market leaders popping up. It's broadening. The breadth is looking good. I mean, I'm getting excited as I see the huge volume. So what do you make of all that? I know we always got to keep attention to risk management, but are you really having a lot of confidence that this is something that's setting up into maybe next year and not just this end of the year?
I'll address the first thing you said, and that is this a short covering rally? And off the bottoms, they are generally initially created by short panic cover. That is characteristic of almost all bottoms, but we are seeing a lot more than just short covering. We're seeing true leaders catching support, working up the right side. The answer to your other questions are, the trend is turned up. How significant is it going to be? The possibilities are very big in that I believe we remain in a bear market. We are not out of a bear market. I don't think we ever got out of the bear market. I think about the Mag 7 were out of the bear market, but the Russell made a new low 6-7 days ago. A new low for the bear. So what happens after bear markets with follow-through days and leaders coming out? The possibilities are very big, but is this going to be a durable rally? I don't know. I'm treating it as it treats me. I'm building positions, and as I get traction and cushion, my confidence will rise. But I know seasonals are very bullish right now, but the market doesn't know what the calendar is. The leaders don't know. So the trend is turned up, and I can't treat it with anything else, but I have to commit. How long, how powerful, how durable? The next big clue will come from, how do these emerging leaders digest? And the more they go up before they digest, it would indicate the power and possible durability. But also, if you have a rampant, violent move up without opportunity for the people who've just made money to take their gains, when they do, from a highly elevated position, it's going to be more violent coming down. So I would rather I love the violence on the upside, but I would prefer a more stable advance up where people get a breath to take some profits. And that way we won't have air pocketism when everyone pulls a ripcord all at once. So I'm talking on both sides of my mouth. I said it would give me indication of how powerful it could be if we do it just doesn't give up any gains and just keeps going. But if that happens, you have to be open to the possibility of a big break.
Yes.
Which could be if it's momentary, it will then signal we could go a lot higher. There's a lot of words.
Exactly. I agree completely. You want that digestion to be more sustainable rally, but at the same time, I'm loving the violence upward. Hey, I'll take that violence any day. So if you play it right, I know you made some great calls, especially this week, that SRPT. I'm also into the biotechs. I'm always watching them. That was a great buy. That was a big sell-off and then a violent move up there. So I know that you play biotechs, and I love what you tweeted. You said that helped pay for your kids' education. So that's significant. So let's start with biotechs. What are you watching out there? And give us some of your strategies on how you trade them, because we know they can be very lucrative and also very brutal when they're traded on the single stocks.
Okay, so biotech pre-FDA approval, and even after the first few months of the drug being on the market, are absurdly high risk. I've been in biotech since I was a kid, primarily because my father was a biotech investor. By the way, he was a very small biotech investor. But they're asymmetric to the downside because these companies they're laboratories. They have no product. They're working on a product. And they are minefields. If they don't pass, all phase 1, 2, 3 clinical trials and then get an FDA approval, that marvelous concept is going to zero. And so you can lose. My simple answer is I pre-earnings only buy indexes, XBI, BBH.
Labu? Labu? I said Labu. Do you ever touch that one? That 3 times one?
And I have a very difficult time with 3x indexes. That is very good for a short-term trader. Like right now, I think you could be in these for a short-term swing trader. I think they're fantastic. I consider myself to be a position trader. I mean, I'm trying to sit for 4 to 6 beat and raise quarters. Now, that's the definition of a true market leader. A TML is high quality beat and raise quarters repetitively. I mean, imagine if you put 10, 15, 20% of your account in a stock that's going to beat and raise 4, 5, 6 times. How much are you going to make? You're going to level up. That's going to be a multi-100% gainer. So I'm a intermediate term trend following position trader. That's my game. Triple levered index funds are great for certain people, but I think the volatility is just much too high for most people, and they're going to get stopped out and lose. That's my opinion.
Love that. So, okay, so during pre-earnings, you do XBI. So tell us that strategy.
Well, back in the day, when my children are 21 and 24, when they were born, I started piling money in for them. I mean, what little money I had, and it just grew. I just bought I bought these basic ETFs, and I bought the Franklin Biotech Fund and paid the load and everything. I was so confident because of the amount of money spent on R&D that certain of these companies were going to hit gold and it was going to ignite the whole sector, which it did. I mean, the first monster in the first big bio wave was Amgen when they invented Epogen.
Yes, I remember.
Well, if you had chemo, if you had cancer and you were getting heavy doses of chemo, you couldn't take what they wanted to give you because you couldn't recover fast enough. But that red blood cell replenisher allowed them to really load up. And if you had AIDS, it prolonged your life. It was a revolution in medicine. And Amgen is one of the greatest TMLs of all time in history, but it ignited the whole sector. I think we are on the precipice of that again, because I think AI, one of the greatest industries to benefit from AI, is going to be biotech. It's estimated 30-40% of all new drugs in 5 years will be discovered through AI. So I think we're in a renaissance for biotech, and I'm not trying to get tricky here with any specific individual name. To put it in perspective, Amgen reported their second earnings was 32 cents against a penny. And that's because it was a lab. All biotechs are laboratories with no sales, no earnings. They're just ideas. They're like crypto white papers. But then when they get the drug and it's a blockbuster, you can see these thunder crazy moves. But then there's always patent lawsuits. Genetics Institute sued Amgen for patent infringement. And the morning that came out, Amgen gapped down like tremendously. So it is a minefield, but if you have earnings, now here's another thing. Interneuron Pharmaceutical invented fen-phen, and it was all the rage, but 3 months into commercial adoption, everybody learned that it ruined your hearts and lungs, and it blew up. It was removed from the market. So it's not even safe when it's first introduced. You have to be very, very careful. But when you get them right, they're life changers. But I think Bill would issue caution and patience and let them unfold and build a cushion, because in biotech, it's no problem gapping down 30% on FDA problems in a day, 40, 50%.
Mm-hmm.
Just had a couple. So there's a lot of words for you.
Absolutely love those. And so first part, I'm going to ask you, so for people, let's say regular investors and traders, how would you suggest they could have exposure to that biotech AI, which I also agree is the future?
Just buy XBI, BBH, and pile into them. Over time, build your position. Like, I think it's the same thing like with nearshoring and reshoring. It's not a CANSLIM trade for me. I'm just building positions for the next 5-10 years. I said I paid for my kids' college. That was a 15-year trade. It didn't happen overnight. And when things get wildly overheated, I might trim off a little bit. It's very different than my intermediate term trend trading. The things I've been buying in the last few days, I expect to be out of in 18 months, assuming it's a 10, a rock star. The biotech trade for me is 5, 10, 15 years, another 5 or 10 or 15. I'll be 80, but
that's okay. You look so young anyways. You know what? The positivity and the happiness and then doing what you love keeps you young. So you'll be around. Don't worry. Okay. So we have long-term biotech. Awesome. So anything else you're looking at right now for long-term besides biotech? Any monster growth or is that more interim?
I think AI, okay, I don't think. I listen to other brilliant people, and when the market corroborates their opinion, I go with it. But the CEO of Intuit said, I don't want to get this wrong, a very notable CEO said, AI is as significant as the invention of electricity.
Agree.
The CEO,
the revolution. Mm-hmm.
The CEO, one of the CEOs of Google said he's hasn't seen something this big since the advent of SaaS and cloud. My experts I'm listening to are telling me that the capture of the AI 50% of it will be captured by semiconductors. I also think that this, if implemented and meets its expectations, is going to expand the margins across every public company. Where is the S&P going to be in 5 years if everyone's margins open up by 3 to 30%, 3 to 20%? What would that do to the S&P? The area is semiconductors for me, and obviously it looks to me like NVIDIA is fundamentally the one. It got very worked up, and it had every chance in the world to break down below the neckline of a Head and Shoulders top, and it actually did for a day, and the institutions came in and ran it right back up. So I think AMD is not the leader, but it kind of like when BlackBerry came out, RIM, there's going to be room for more players here. And this is just one tiny little area of it. So I like semiconductors quite a bit. But I love Arista. Look at this monster gap out it had. It is a earnings powerhouse juggernaut, and their products are integral for the implementation of AI. They're just, it's like hand in glove. There's CrowdStrike, another beneficiary, a major liquid, semi-liquid, small mega cap name that is just, these are 99 comp stocks, okay? And they're acting really, really well. Although CrowdStrike has not lit up yet like ANET. ANET came out on earnings and it's holding very, very tightly. Right now, that's exactly what I'm looking for. To this point, it is acting textbook great. We'll see. It could collapse this afternoon, but for now, the runway is good.
Absolutely. Remaining open and flexible. That's key. I'm also a fan of CrowdStrike. Cybersecurity to me has been, I mean, having an online e-commerce manufacturing business since like 2006. I know the importance of cybersecurity, especially in the rise in remote work. And so cybersecurity is so important nowadays. I mean, the remote work has just changed the way we live and the way we do everything. And I agree with you. AI, automation, we've had declining productivity for quite some time, and we need it more than ever. Challenges bring opportunities, and opportunities to find solutions. AI to me is a transformative revolution, and it's just elevating, and it's also deflationary. It's going to bring down costs, right? Streamline. So it is changing everything. So any other names you like in the AI space that you can think of? SMCI is another one of my favorites. I've been there since I think last year, April. Another great monster stock, in my opinion. Anything else you can think of for AI that we can watch?
There's so many, I don't even know where to start. Consult the Roppel Report. It's jam-packed with them. I mean, like Microsoft.
Love that one, yeah.
Coming out of a double bottom. It's a liquid leader. It's Meta looks fantastic. These are the big liquid names. You mentioned SMCI. I think the fundamental variables are clearly there.
They're beautiful.
Pre-tax, after-tax, return on equity, sales, earnings. I'm going to need that pattern to confirm. It broke so, now it had a big run also.
Yes, of course.
It could digest for a year and then reemerge. But right now, the price action doesn't equate to the fundamental metrics. But it was a major leader. I mean, oh my gosh, there's so many names.
Look at Palantir's big monster move now. You see that one?
I was active in Palantir this morning, and if you would have asked me about Palantir yesterday or 3 days ago, I would have said it's not acting right. Well, it now cleared out through the top on significant volume. It changed tenor overnight. Adobe looks fantastic.
Absolutely.
It's got a handle here. I think the uranium play.
Oh yeah, CCJ, URA. Oh yeah,
there's a whole other area.
The commodities, I've been bullish on those for quite. I think we're in a secular bull with the commodities.
I agree. I don't do well with them because they don't trend beautifully. They are more jagged and restrained at certain times. But this may be very different than. Oh, by the way, I love gold. Yes. Oh my God. Gold is in like a 13-year base. It is, I call it the Mona Lisa of bases. It's so elegant and smooth and symmetrical. It's just the largest cup and handle. The only bigger one is the Nikkei. But I don't want to go into that.
Oh yeah, Japan.
I want to go backwards a little bit. You said AI is deflationary. It's so funny that Stan Druckenmiller came on CNBC yesterday morning or the morning before.
Him.
I remember. I love him. I
love him too.
To be him, which I'm not a global macro trader. I wish it was half as good as he was. I wish it was 10%. But the point is, he gave a very airtight case of how ugly our financial picture is, our
It
debt
is.
to equity, our debt to GDP ratio.
Over
he's like,
20%, 120%.
100, 120, 122%. And he's like, you can't argue with the math here. And so this really bearish picture came out, and then we got a follow through day. I find it very ironic that that occurred. And I believe in American exceptionalism, never bet against America. The golden goose of capitalism is real. And Robbie Batra wrote a book called Bankruptcy, whatever, 1990, whatever. And he talked about the twin deficits. And at that point, he made this airtight case. We will never solve the trade deficit or the budget deficit. And guess what? American exceptionalism comes along, and we had Graham Rudman Hollings, and we had a balanced budget, and off the market went. I think part of the solution to this incredible debt buildup we've had is AI deflationary. And I think the Fed's going to devalue the dollar, which I think is gunning crypto here. Part of it. I think the yield on the 10-year had been rising so significantly because of the awareness of, the Fed offloading its balance sheet and the possibilities of how are we going to pay this off. Again, I just need to look at the short-term trend, but I am very optimistic on America's future. And we will get through this. We will figure out debt. Whether we have to deflate the dollar and how much is AI going to contribute to deflation in certain areas, I hope that all pans out. But you just can't stop innovators. These guys who are splitting genes and writing code and inventing all these things, they don't care that the debt is 122% to GDP. They're like, I'm building something to change the world. And they're going to come public, and it's going to form a perfect base, and it's going to have a blowout earnings quarter, and it's going to give everybody an opportunity to level up their life. And it's not going to be one. You're going to see 10 to 20 on every bull cycle, and then another 100 also rans. And this is going to happen every 9 months. You're going to have a 9 to 18 month bear market, and then you're going to have a 3 to 5 year bull over and over and over again. So this is never going to stop unless the golden goose of capitalism is suffocated by socialism, which I don't see happening anytime soon.
Exactly. I agree with you. I believe in humanity as well. There's so much innovation going on. And even like you mentioned, Bitcoin. Bitcoin is the most thermically dynamic, thermically sound, hardest money ever created. And it's only based because of technology. So technology is everywhere and a part of our lives everywhere. And technology is the key to the growth and the future. So agree completely. And yeah, the long-term yield, the bear steepening of the yield curve. We had all the bearish news this past week. And like you said, Stanley Druckenmiller goes on and just paints this very gloomy picture and just reiterates from, I remember in the spring, I think it was April or May, he came out and said, we have a decade of sideways action and no real upwards movement. And it's going to be stagnation. And here we are running off with the bulls again. I mean, either bear market rally, whatever it is, we follow price. And that's the key.
How much would you like to bet that he's buying futures, equity futures right now? What are the odds?
He
Very
moves
high.
Markets. Absolutely.
He's not going to miss an opportunity. He may have this negative outlook longer term, but he's a trend follower. I don't talk to him ever. I've never spoke to him, but I would bet money that he is bought or buying and has been buying index futures. He's changed his mind, even with that gloomy outlook. And he also, I think he said, there will be amazing opportunities in individual names along the way.
Absolutely. There always are.
Absolutely.
We know that from history. You know, I've been around quite some time as well myself, and I've seen that through other bear market cycles. There's always opportunities. Even if overall we may have some sideways, there's always those stocks, those companies that are the leaders, the innovators that emerge, and there's always opportunities. So time frame. And that's the message that you just said that we need to continue talking about. Like Stanley Druckenmiller, he paints this gloomy outlook long term, but in the meantime, in the interim, lots of opportunities. So, okay, so we talked about the long term, biotechs, AI, the future, growth, technology. Let's talk about the interim and what you're doing right now, what you're seeing for opportunities in the next 6, 12, 18 months.
you need to be looking at the high volume, not high volume, the names that are emerging right now on huge increases in average daily volume over recent. And you need to be looking at big earnings growth. The new high list, the damage is so significant that I don't expect the new high, assuming this thing broadens out and goes. The first thing we're going to see is new lows are just going to dry up completely. But new highs will not expand because they're so damaged, a lot of these names. That will eventually come on. I call the new high list the gold bar list. If a stock's going to go from 30 to 300, it has to make a new high all the way up. It can't not be there. It is, relative strength coupled with the new high list is going to point you right to where you need to be right now. But the institutions are tipping their hands by attacking certain stocks and ramping that volume way over average, normal average. So you want to be running up on volume screen. That's kind of my go-to first thing in the morning. And then when the market's closed, I want to look at leading RS, the names that, if you look at like ServiceNow, the last 5, 6, 7 days, it was going up, up, up. Well, the market was cratering. It was but it was leading. So the relative strength line was going straight up. Here's another story about negativity, but yet the market's going the other way. And that's Pinduoduo, Luckin Coffee, EDU, and NetEase broke out this morning or yesterday. And the Chinese balance sheet makes ours look like great, but the stocks are going the other way. And Kyle Bass is another brilliant mind, and he's right. He's spitting facts and logic, but the market's going the other way. So he may ultimately be right, but how much money might we make before China blows up? I'm just going to go with the trend. And the other thing about Druckenmiller and Kyle Bass and Peter Zahan and all these global macro brilliant minds is global macro always looks ugly because basically the world outside of the US and developed Europe is ugly. It is dictators, communists, scumbags raping the populace, war. But the market continues to persevere because of human ingenuity. And I just say global macro is hard to look at and be positive. That's why I try not to look at it. Politics, when you inject your politics into your trading, you're going to be it's ugly. Okay, we can't elect a speaker for how long? I mean, we got 2 knuckleheads running for president. It's incomprehensible that we have these 2 candidates, okay? I mean, one of them's my idiot, but they're both idiots. And yet the market had a monster follow-through day. The Russell's up 5% in 2 days.
Wow.
Market doesn't care. So remove global macro, remove politics, look at your gold bar list, the new high list, the up on volume list, the leading relative strength list. It's going to point you straight to the leaders.
Love it. Great rules there. One of your monster trades in the past, Baidu, is part of that China global macro. So you made quite a bit on that. Could you tell us a little bit about that great trade you did with Baidu, or trades, I think, over time?
You're cherry picking the biggest trade. I made more on that than any other stock. I made 30 million on it. My fund made 30 million.
Congrats. Awesome.
It was my partners really made a lot of money on it too. But here's something about Bill that people may miss. He was primarily a fundamentalist, but when you'd go see him, he would talk about charts. Going back to Baidu, and I'm going to overstate the case a little bit here, and the numbers aren't going to be exactly, but I'm going to make the case. What drove me was there was 1.3 billion in China, people in China, and something like 10% of the population or less was online. And I had read that 30, 40,000 people every single day were coming online for the first time. And I knew they were going to need a search engine. And so I'm like, well, this fundamental story is unbelievable here. And then Google says, we're not going to censor. And the Chinese government rerouted every query to Google to Baidu. And I'm like, let me get this straight here. We have 10% people online, 30, 40,000 are coming in a day. And now the government is accelerating this one search engine. And then it went up like 15 weeks in a row off the bottom. And I mean, I really hit it hard. I think I owned at one point, I had 750,000 shares. I traded around it a bunch, and cushion is always critical. But one morning on earnings, they would report at crazy hours, and they go, well, yeah, we're going to change the whole platform from what you know to a new platform called Phoenix Nest. And the stock imploded. And I almost vomited up my whole lunch for a year because it gapped down like 20%. And I was so long, my eyes were bleeding. And I had to trim. And it went down for 2-3 days. I can't remember exactly. And all of a sudden it firmed up and it started to go right back up again. It was kind of like the Netflix moment when they went from, we're not going to mail them out to you anymore, we're going to go 100% streaming, and the stock collapsed. And then it regained its composure. And I rebuilt up my whole Baidu position. And, I was a cowboy back then. Okay. I mean, that was a really big position for me. And I don't think I'm going to live like that again. Bill lived like that his whole life. I am very comfortable with how much I've made, and I'm trying to be in the stay rich business, and I'm not going to lever up in thunderous ways. I don't think I'll ever be 200% long again. But also I have responsibility to my partners, okay? Their risk tolerance is different than mine. But again, I don't want to, any stock you own can gap down 20-30%. And I don't want to have the risk of that in a single stock risk on margin 200%. I'm past that. I don't, and again, I malign a lot of people for short-term trading and scalping and going super heavy on margin, but that's how I made my war chest. It's hypocritical. It's disingenuous of me. Everyone's got to build their war chest up, and that's how I did it. And I took exceptionally big risks, but those days are gone for me. A big long position levered for me would be 130, 40. I suppose I'll be 150%. That is cowboy for me. That is extreme end of cowboy for me. So Bill was a fundamentalist, big time. And that's something that people don't really recognize because he talks so much about charts when he spoke publicly. But every stock that I made a lot of money in, the fundamentals, I knew them cold, in detail. And it gave me the confidence to sit. That's the only way you're going to sit for 4 to 6 beat and raise quarters, because the violence in the shakeouts in there are going to rock your world. And I'm very willing to turn tide completely, even though the fundamentals look amazing, and abandon the whole position. If the market doesn't corroborate what I believe to be fundamentally true, I will reverse and get out of everything, all of it. And I can do it quick.
Love that. Wow. There's so many excellent points there. I almost don't know. You know what? I'm going to start with, since the days of Baidu, whichever you want to call it, you don't need to take those risks. Now it's more about wealth preservation. And of course, you're still going for it, but you don't need to that extreme. How has trading changed? Are you still seeing those same opportunities nowadays, those monster stock growths? Do you think they're more, or do you think they're less, or about the same?
I know they're more because I track the patent office applications for patents. It's not going linear like this. It's exponentially ramping.
Wow.
The IPO market's been dead, and the private equity market has really sucked the life out of the juice out of the earlier leaders because they remain private much longer. But the opportunities are just never going to stop coming. Can you ask me that question again? My mind ran away.
No worries. No worries. Actually, you answered it in full. The opportunities are plentiful and even more. And that's what we love hearing, because I feel it with this new revolutionary raise in our consciousness with AI. I think there's going to be so many more opportunities. So excellent. Well said. Now you talk about fundamentals. I always call myself a fundamental investor. I think that's key for me to buy into a stock. That's why SMCI was I love that stock. When I first looked at it, it was single digits PE, massive growth. And then they would raise their earnings expectations, come out, and then they would beat and raise again. Love seeing that quarter after quarter. Now, is that what you consider a TML,
yes,
a true market leader? Tell us more about your TMLs. I see that in all your tweets. Tell us how you define that.
Okay, you're going to have, I have a screen. I call it my 2020 screen. 20% pre-tax, after-tax, return on equity, sales growth, earnings beat, forward earnings estimates. If you have every one of those variables over 20, you are dealing with an elite name. There's only so many. There's 4,500 public companies. I'm looking at 10, 5, 10. I really almost never build my portfolio up to more than 7 or 8 names. And I try to, again, I used to take my whole account and put it in 3 names on margin. Today, a big position for me is about 18% of equity in one name. So that the TML is, once I have those fundamental metrics all lined up, I then need to delve into the story and understand what is it about this new product that helps you lose weight, or it espouses to, look at a can of Celsius. It says, we're going to rev up your metabolism. That's like code word for, we're going to help you lose weight. Who doesn't want that? Okay. I mean, you know why Lululemon yoga pants are so awesome? Everybody wants to lose weight. So I look at the caseage, the gallonage, the total addressable market. How big is Monster's market? That is Celsius's market to eat. Okay. This is now again, the last month or two, it's been acting very, very poorly, and I abandoned my whole position. Now today, it's showing some power. I don't know what the news is, but what's a TML? It's got to have liquidity. Institutions cannot buy tiny little stocks. So even if a tiny little stock has thunder earnings growth, if it's illiquid, there's no chance Fidelity's even going to look at it. Okay. Liquidity, the magic elixir of a TML is as high a earnings growth as you can have, while the liquidity is tremendous. Because when you're running 10, 20, 30, $50 billion, you've got to be in these liquid names. So when you get all those variables at 20% or better and ramping and accelerating, that's another thing. Ramping and accelerating earnings growth is key in almost every one of these names. Sky high up to down volume is part of a leading group. You have to have that liquidity with the very high sales and earnings, and that's where the institutions are all going to pile into. If you have 2 stocks, they're both growing at 50% a year, and they're 20% across the board. The one that trades $500 million average daily dollar volume is going to have a PE 4 times the size of a stock that trades $30 million worth of average daily dollar volume, because the institutions can't buy that little piece of nothing. It has to grow up. And then the sweet spot is going to be the lower to middle of mid cap. That's where you can still get extremely high earnings growth horsepower, and there's going to be some liquidity in there, and it's going to be slightly more mature, and institutions will have had some time to review it and get comfortable with it and build positions. How about there's 5-minute answer on what a TML is.
Love it. That's awesome. That's what we all strive for. We look for those TMLs. So off the top of your head, could you share with us just a few of your TMLs as examples for people?
Got to turn around here. Hold on. I think Pinduoduo, although it's not quite getting the traction, it meets everything. They have this new product called new platform called Temu, which is one of the most heavily downloaded apps on the App Store. It has everything I'm looking for, although it doesn't quite have the institutional sponsorship. So I'm making, and that's a big one. Okay, but I'm willing to go with the price action there. I love Adobe. I love CrowdStrike. Man, I should have been more prepared.
No worry, that's plenty.
I think that's great. I like DraftKings very much. I don't like.
I saw that today. What a huge rise today,
dude! Who's doing that? It's not my next door neighbor buying his 2,000 shares. Okay, there's an institution, and they're sitting on the bid.
They're accumulating that.
They're just like, if it's 25 bid offered at 25 1/8, that bid, they may show 1,000 shares, but they're really bid for half a million shares. That's where you get this action. And something else which people maybe don't really understand because they're not institutional is, hypothetically, if I call a trader and I go, buy me 200,000 shares of XYZ, and I go, take it easy, buy it all day. I'll call him at 2:30, a half hour to trade. I'll say, what do you have done? He's like, I have 125. If I really want that stock, I'll go fill it all by the close and take the offers out. That's why the close of business is so important. You see the institutions tip their hands, fill the order and ramp it, or I'm not that hot on it. Let's chill and we'll come back tomorrow and the stock will go dormant. The institutions tip their hands on the close.
Well said. Exactly right. And those are the ones to watch. Thank you so much for that. So much brilliance there. I love your passion and excitement. Getting me so excited as well. I want to go back and check the market. But yeah, I noticed that DraftKings today as well. You know, another great biotech that I was looking at, TGTX, big rise in that one as well. These biotechs are all waking up. A lot of excitement. And NVO, another big one, big pharma over there. Exciting ones. Vertex, oh my gosh, that was a great one for a while. You know, that was something I was playing last year. A lot of great ones there. So, okay, fundamentals, technicals. What about the sentiment when it's very bearish? I think you get excited, right? Because you know you want to buy when there's a little fear out there, like you did with SRPT, and then the macro. We were talking a little bit about macro, but you know, macro, they always say higher rates, you know, it lowers the equity risk premium, affects the stocks, asset prices come down, and the liquidity for the markets. So let's put that all together and what's your formula and how you look at things.
Well, sentiment is a great secondary indicator because sentiment can almost always get worse. And sentiment gives me an idea of the level of, or the magnitude of the opportunity before me. But until you get a turn like we've had this last 3 days, sentiment is to be put on the shelf and watched. When you get a turn after a deeply, deeply oversold market, stochastically, all the NAII bear bull indicators are super bearish. Now you know there's ample firepower to go because everyone's out. Tom Dorsey put out, he tweeted out his point and figure, which I strongly recommend everybody pay attention to. But the overbought or the bullish percent on New York Stock Exchange got to be very low. And he said, anyone who was going to sell sold already. Now that was a bold statement and partially true. Then I know the opportunity to the upside is very significant. And that's where you get initially the rally will start because of short covering. And then the institutions who believe will come in and continue to push these names higher. So I love sentiment, but I have to have confirmation that that is now exhausted and we're going the other direction. So I really pay attention to it. It's like the spring, it's being crushed down, you know, and then when it releases, when the sentiment gets ugly, that spring is coiled and then it can rip open. So I love bear sentiment, and I get really bullish after major. I believe we've been in a 31-month bear market, and I think it may have just ended. I'm not sure, it's fledgling, but just look through history. Look at a wall chart. Okay, after every bear market, look what happens. Why do I get so bullish? Because I've been doing this for 30 plus years. I know what comes after bears, but you can't let yourself get so negative. You can't turn away. Most people had given up on this market. They stopped with their watch list. You're never more than 3-4 days away from a major market turn up or down, but people get complacent at the top and they give up at the bottom. And that's what I think clearly just happened, and sentiment showed it.
Well said. It's when they finally just give up that things change. So that's why it's always important. I always tell everyone, you want to always keep your eyes on the market. You don't want to be too far away from it, even if you're staying in cash, because you know it's a little, you know, rough waters over there and it's very choppy. You should always still keep your fingers in. You should always be watching. So
but people
absolutely.
give up. They've given up. There's a lot of people out there who did really well post C19, and some of them are still holding Peloton and Zoom and Teladoc, and they've been obliterated. They've lost everything they made and more. And we've lost, this bear market has washed out a lot of people. This was not as bad in magnitude as 0809 or the dot-com bust. But dude, I'm a lifer. Okay, I've been through all that. I saw the 98 currency crisis. I saw the 87 crash up front and close. I never give up. I will be there. I will always be there after the bear because I know what comes. But most people have lost a ton of money and they've given up. We've lost a lot of people. We haven't lost as many as 08, 09, and 2000. But don't think for 1 second, because the NASDAQ only was down 30%, internally, growth stocks were mauled by the bear. It's a misnomer, a smokescreen, deceiving what happened internally versus where the indexes are.
Absolutely. I like to say the longer the base, the higher in space. So consolidation is important as well when we look at stuff. And I know you mentioned, I think today, I think I saw, BITO. I think there was a tweet from you that said that BITO looked like it was consolidating. Is that another strategy you look at when you see that tightness forming? It looks like a spring ready to go in one direction.
I get so fired up when I see the right side up a cup, or even gap ups. I like them to orderly move up, but when they then go dead tight, look at BITO. And now, by the way, I don't like the product. I don't like the way they have to roll the futures contract, but I can't ignore that tight line in this handle. It is crazy tight. When I see that in the beginning of a bull run, no, by the way, crypto's been running for a year already. All right. It was the stepchild to AI. AI commanded everyone's attention. While we had FTX blew up, Silvergate blew up, the other major bank blew up, the SEC sues Coinbase and Binance, Terra Luna blows up. I mean, these are death blows to an industry. It would be any other industry that was centralized would implode. It would be over. And Bitcoin just kept making higher and higher and higher highs. But nobody was paying attention because everybody was fixated on AI. Well, the developers are committing to new projects and building out. And nobody was paying attention. And now we've got the halvening coming in April and the historical trends here. And I wanted to say, I like orderly moves up. Crypto is not an orderly beast. It is not. And I also talked about, I hate, loathe, and detest entirely overhead supply. But this is a different nature. Its disposition, its behavior, its personality is violent and plows through overhead. It just does. I think the trend is up, and we are in a flagging position in a lot of crypto names. The altcoins have barely woken up out of their slumber. This is so early. Bitcoin is leading. It's the blue chip good seal, housekeeping seal of approval name. People are deathly afraid of all of these more speculative names. That tells me we are so early in this. Again, a trend change is a trend change. I can eat my words in a couple days if I have to, but I know this. I've been around. I've seen 3 crypto rallies and been involved with them because of my partner, Matt D'Souza, who helped me co-found the crypto fund that I run. Unfortunately, my main man, Matt, passed away. Wow. So I keep plugging along in crypto because I want to do right by him and keep that thing going.
That's so nice. Sorry to hear about that. But, to add to your point, I spoke with a great CIO, Hafa Sagori. He has a Nakamoto portfolio that he did some extensive analysis on Bitcoin. And his analysis, based on all his research, was that Bitcoin is a type of asset class that is better to do lump sum over dollar cost average, which is interesting because we always hear dollar cost average is the best strategy. But with Bitcoin, because of its violent moves up, and how it moves is just better if you have the money to just put it all in versus dollar cost average. And that was based on his research. So that adds to your point. Exactly well said, Jim, that Bitcoin is a different type of asset, and it's uncorrelated, and it acts in its own way. So very different than the fiat related asset classes. So very, very interesting there, and great call out today with that BITO chart.
We'll see. It's got to come out. It's
but it was a great call.
It was what it was a good identification of a possibility. Yes. Now, until it comes out, it's just sitting there. I would not, it's not actionable at this minute. It has to make that high. But it does rev me up when I see something like that. Absolutely. Because I've seen a lot of them in history, and God, especially after a bear market and this monster 3 days in a row follow through days. I mean, Russell's up 5% in 2 days. The one thing we've been waiting for is the Russell to engage. That means breath. The market has been suffocated, even as the NASDAQ's been going up. The new high list had been ramping every day. There was no breath. Russell's making new lows, and all of a sudden it's all turned.
Slowly broadening out, higher breadth. Yes, and higher volume. That's key. So identification, like you said, is key. And that's the first step. We identify. So my next question is, what signals for entry and exit? How do you distinguish the signals from the noise on entering?
I'm so basic, okay? It's no secret. It's just emerging from a digestion. The tighter the digestion, the more likely you're going to get a healthy move, and then the volume to corroborate the move out. You asked me what's changed, and I would say that the world has become more liquid in the market. The front runners, the Ken Griffins, the algo traders provide massive liquidity for people. Back in the day, if I bought 100,000 shares of stock and the spread was 50 cents, do the math, 50 grand to open your position. Now the spread is 3 cents, 2 cents, 5 cents is a big spread. There's liquidity in there to fill large orders. So if they want to steal a quarter of a cent for me and front run my 100, don't care. They're providing massive liquidity. Now, the downside is when things get ugly, the algos shut off and you get air pocketism. So there's the ugly part. There's no specialist to take. The buyer of last resort is gone. We've removed that. So there's a downside to it. But my signal is a new high out of a digestion. The tighter the digestion, the better. And hopefully you have that volume to corroborate the move. And I don't care whether it's a Darvas box, a double bottom, a cup and handle. I think Bill coined these terms to make it more understandable, or you could explain it to the masses. They're all just digestions. The characteristics within these digestions or bases that make them more actionable would be the drying up of volume just prior to the breakout. And then the opposite, that the compression of the average daily range, tight closes, and then the volume when it comes out. But I mean, this is really basic stuff. The problem is people front run what they like. There's people who are going to hear this and they're going to go, well, Jim said BITO, and it's in the digestion, and they're going to buy it right here. And what if it breaks down the bottom of it? It's better to wait for the signal to act, because I really don't know which way it's going to break out. I think I know, because I'm all excited and the market's had a follow through day and it looks great. And I'm a huge crypto bull, but until it comes out, not actionable.
Exactly. We just identified, you saw consolidation, no call out to buy or sell or anything. So make that clear point there. But excellent, keeping it simple is key. We don't want to overthink. We don't want to overcomplicate. We already live in an age of information overload. We have bandwidth constraint and so much opaqueness. We don't want to overcomplicate the simple trade. So thank you so much for that. Now, follow through days. They're not all created equally, and I know that you grade them. So please tell us your grading system for follow through days.
Okay, so I started in 85, so I've been doing this for 30, 35 years. I don't know what it is. I just started to grade the follow-through day recently. If you have a follow-through day and you're running screens like crazy and you can't find anything to buy, that's a big, gigantic signal that it's a negative.
Mm-hmm.
How violent are the ones that are coming? Does it feel like a stampede? Are you getting 10 major breakouts in a day, or high quality names emerging over pivot points, like the middle of a double bottom? What are the quality of the names? Is it just junk coming up off the bottom, or is it real leaders emerging? How big is the percentage gain? O'Neill and Company is split from the paper. Okay, Dow Jones owns the paper. O'Neill and Company calls the institutional. So institutional O'Neill calls the follow through at 1.7% gap or gain. The paper is using 1.25. It doesn't matter. What matters is how is the volume in, what is the percentage gain in volume over average? How big is the percentage gain up? How many leaders are emerging? If you have a C follow through day, you still have to buy something. If you have an A plus follow through day where you go up 3.5% on the index and volume is 30% over average or the prior day on the index, and you get 25 monsters coming out, that's an A plus day, follow through day graded. You've got to commit 30% of your money in 3-4 names on that A plus. It depends. They're not all the same, but it's trading is an evolution for me. I still learn. I can't believe the things that I didn't know 3 years ago that are like life-changing for me, you know, like risk management and psychology. Like I went like 2 decades without even ever paying attention to psychology. And that's maybe why I had such a volatile equity curve many years ago. I had too many emotional hangups to be a more smoother equity curve, but I still don't have a smooth equity curve. I just don't. My performance has been very lumpy over the years, but when I get it right, man, it's game on.
That's the key. It's about when you identify and you nail those winners, because our win rate isn't, I think the average is about between 45 to 55%, something like that.
Not for me.
Right, with some professional traders. So being able to ride those winners, and that's key. So good, and that's great to hear. So I want to go into the market psychology, because that is so important. Our decision making is based in our subconscious and our emotions, but it's about how we react, and we don't want to act on those emotions. We need awareness. Identification is key. So I want to know how, you said you recently just started embodying all this market psychology. How do you make your decisions in trading with that in mind, avoiding cognitive biases such as anchoring to price targets or recency bias or sunk cost bias? How do you overcome that?
I go to a shrink. I work on myself. There's greed, impatience, ego, the need to be recognized, impulsiveness, fear. Fear causes you to sell before you hit your stops. You suffocate your trade. There's over trading. There's a need to feel like I'm a trader. I have to trade every day to validate myself as a trader. There's a need to feel important. There's ego. I won't honor my stops. Trade too big because you're greedy. You want to be a big deal and drive a Ferrari. You have to trade and get that money quickly. There's lazy. You won't do the work. You won't be disciplined over long periods of time. I mean, why do people fail in the market? Because humans aren't predisposed to have all these emotions in check. I know a big step forward is knowing your frailties and bad emotions that keep you from winning. The market is the greatest psychologist. It will expose your weakness very, very quickly. And people go through cycles of having their psychology wired down really well, and they're calm and tranquil and zen. And then sometimes they get me. when you're levered long and you have four monsters and they're all ripping and the world is great, I think this is the greatest sport in the world. Horse racing, race car driving pales to the euphoria that you feel after doing all your work, waiting patiently. Everything lines up. You see it, you bet it, and then it works. The reward of being right. This is the grandest chess game ever, but most fail because of their psychology, their emotions, and you will go up and down. You will have, like I said, you'll have periods where you're really in line. You're in touch with what, in harmony with the market and yourself and your position size, and it all works. But to get all those stars lined up is tough. It could be every couple years you catch it. Listen to Laird Hamilton, his interview with Charlie Rose, and he talks about catching waves. He's like, well, you have to catch a good wave, you can just go out on the beach, but to catch a great wave, you might have to go to Australia at the right season. And you have to be prepared for it when it comes. You have to train and eat right and wake up super early and get out there. And then that's to catch good waves. To catch really, really great waves, you might have to wait 5 years for that perfect set. And that's the market. But I think we're at a precipice of something like that because of the length and duration and magnitude of this bear we just had. So all those psychological reasons can kill you.
I love that. You said exactly as I just said too. Awareness is key. Awareness and knowing yourself. There's some traders that I've spoken to that do mirror exercises, and they actually look at themselves in the mirror and they just try to assess how they're feeling and knowing thyself. So, patience is key. Like you said, waiting for that wave. And the stock market is like an ocean, and we're like surfers trying to find the right wave. I love that. And you're very humble, and it's about never letting these wins or losses really get to you and go to your head, and keeping a level head. And you certainly have done that. Jim, this has been absolutely amazing, very enlightening. And you're such a cool guy too, I have to say. You're really nice and very positive. So please tell our audience how they can follow you and learn from you from that Roppel report.
You could go to roppelreport.com. I started writing this 20, 30 years ago. And think about technology. I'd have to write it, go to the copy shop, print 1,500 of them, fold them by hand, stuff them in an envelope, put stamps on them, and mail them out. And maybe they get them 2-3 days later. Now I do it digitally every Sunday night. My reports are generally a short one's 50 pages, and it's sometimes 60, 70. I cover every single aspect that you need to know to implement CANSLIM. I cover every market. I cover everything that's relevant at the moment, the dominant fundamental factors, the leading stocks, the pivot points, the actionable ideas. I give fundamental breakdowns occasionally. And then let's say Monday, Tuesday, NVIDIA's blowing up. You want to know what to do? Every Wednesday, I do a podcast. I answer all my subscribers' questions if it takes 2 hours. I give a market review on Wednesday on top of it. You can buy the bundle of the 2 services together. And I think if you buy the bundle, you get like 30% off. And then because you've been so great and having me on, I'll offer everybody an additional like 30% off with a coupon called Founder. And
cool.
If you want to implement CANSLIM and you don't want to take the bruisings and the beatings that I did to learn how to implement, subscribe to the report and I will answer those. If I had access to Bill O'Neill when I was 23, I'd be a billionaire for sure. I can take all that learning curve and those bruising beatings out of there for you by being able to ask me all these questions. And let me do the 10 hours of research every Sunday and put it in digital form and get it out to you before you go to bed on Sunday night for Monday's open.
Wow, you sold me. Wow, this is awesome. Definitely Founder, correct? That's for all our audience to get an extra 30% off. It's a no-brainer.
Buy the bundle. Buy the bundle.
Absolutely. Well, thank you so much, Jim. We look forward to following you on Twitter as well. Where you
Twitter.
Yeah, Twitter at Uptickin, right?
That's it.
Got it. Thank you so much, and thank you to all the listeners.
Everybody have a great weekend.